Welcome to the Deep Dive. We're the show that takes, well, frankly, mountains of information and boils it all down to the really essential stuff, the surprising bits, and maybe even the mind-blowing insights. Today, we're tackling something pretty fascinating. We're looking at how just one earnings report from a huge tech company can basically give us a blueprint for where a whole industry is heading, especially now in this age of AI. Our focus, Microsoft's landmark Q4 fiscal 25 earnings report. And believe me, this isn't just crunching numbers. It's about seeing a company make a huge fundamental shift right in front of us.
That's exactly right. Our goal here is to really pull out the most critical pieces from Microsoft's latest performance and, their strategic plans. We want to uncover what really drove this quarter, how AI is actually genuinely fueling their growth now, not just talk, and maybe most importantly, what their really aggressive investment plans mean for the future of computing and for you.
Yeah, and I think you're going to have some real aha moments today, especially when we get into the sheer scale of their AI plans. It's way bigger than you probably think. Okay, let's kick off with the big picture. Microsoft's Q4 for FY25 was, well, it was a landmark quarter by pretty much any measure. They didn't just meet expectations, they kind of blew past them.
Absolutely demolished them in some cases.
So let's lay out the key numbers. Revenue hit $76.44 billion. That's an 18% jump year over year. And importantly, it significantly crushed the Wall Street consensus by about 3.7%.
Yeah, for a company this size is, well, it's huge.
Exactly. Then you've got diluted earnings per share, EPS, at $3.65. That's up 24% year over year, beating the forecast by almost 9%.
Just stellar numbers across the board. Operating income, $34.3 billion, up 23%. Net income, $27.2 billion, up 24%.
So that scale of outperformance, I mean, for a company as massive as Microsoft, it suggests Wall Street really underestimated something, right? What was it? Was it just the AI velocity?
I think that's the core of it, yeah. Analysts, they build models, but they clearly underestimated the speed, the sheer velocity of how quickly AI-driven consumption would ramp up on Azure. It's not just adding revenue. It feels like it's multiplying it in ways that maybe weren't linear, weren't easy to predict.
And what's really telling, looking at those profit numbers, operating income up 23%, net income up 24%, both growing faster than the 18% revenue growth, that points to some serious operational leverage.
It absolutely does. And a big part of that story is their disciplined cost and headcount management. We know their global headcount stayed pretty much flat over the past year, around 228,000 people. That efficiency is remarkable given the growth.
Is that sustainable, though? Flat headcount with this kind of expansion, could that become a bottleneck?
It's a calculated risk, definitely. For now, it shows huge efficiency. They must be reprioritizing internally like crazy, focusing resources on high-impact AI areas. Plus, it tees up the massive capital spending we'll talk about later. Maybe they see tech offsetting some headcount needs.
Got it. And just for context, this Q4 capped off a huge full fiscal year 2025 too, right?
Yeah. Full-year revenue was $281.7 billion, up 15%. Operating income, $128.5 billion, up 17%. EPS, 13.64, up 16%. So Q4 was a really strong finish to a record year.
Okay, so those are the big headline numbers. But where did this massive surge really come from? The epicenter seems to be the intelligent cloud segment. Pulled in $29.9 billion in revenue, up 26% year over year.
That's the engine room, no question.
And within that, Azure.
Wow.
Azure and other cloud services surged by an astonishing 39% year over year. That's a huge acceleration from maybe the 30% range they were in before. Analysts were saying it crushed expectations.
It really did. And Microsoft did something really interesting strategically this quarter. They disclosed Azure's standalone annual revenue for the first time ever, over $75 billion for fiscal 2025.
Why do that now? What's the message?
It's a strategic masterstroke, I think. By putting that number out there, AWS is maybe $111 billion, Google Cloud around $50 billion. They're saying, look, we've hit critical mass. We're accelerating. We're gaining share. It's a signal to everyone, customers, competitors, the market, real confidence.
Okay, let's unpack this a bit. CEO Satya Nadella made a point that the growth wasn't just from those new AI services. He said it was across all workloads. Why is that distinction important?
It's crucial because it points to this powerful pull-through dynamic. The excitement, the absolute need to use Microsoft's AI capabilities is making customers move everything else to Azure faster. They're accelerating broader cloud migrations, consolidating their IT. It's not just buying AI. AI is making them buy more Azure overall.
So AI is like the catalyst for the whole cloud business.
Exactly, like that Nestle example they gave, moving a huge SAP landscape,
Yeah.
200 instances, 10,000 servers. They're realizing if we want to do AI right, we need our data and infrastructure here.
Which brings us nicely to Nadella's full stack idea. He talked about building the most comprehensive suite of AI products and tech stack at massive scale, from the ground up, right?
Right, starting at the bottom, the foundational infrastructure, what he called the plant. Microsoft's engaged in this, well, historic build-out of physical stuff. Data centers. They're saying over 400 data centers now across 70 regions. Nadella claimed it's bigger than any other cloud provider's footprint.
And get this, this was one of those aha moments for me. They stood up more than 2 gigawatts of new capacity in the last 12 months alone.
2 gigawatts.
It's just a staggering number. What does that tell you?
It tells me they are running flat out. They see demand as basically unlimited right now, and they are throwing everything they have at building capacity to meet it. And Nadella declared, every Azure region is now AI first. That's huge. It means future data centers aren't just general purpose. They're designed specifically for AI workloads. Think advanced cooling, everything optimized.
I think liquid cooling he mentioned.
Exactly. They're building for AI from the ground up.
And it's not just hardware. He also stressed the software side, how optimization delivered, like 90% more tokens for the same GPU on GPT-4o compared to a year ago.
That feels like classic Microsoft DNA, the software expertise.
It's absolutely critical. That software optimization means they get way more performance out of those incredibly expensive hardware investments. It lets them serve more demand with the same physical kit. That's a massive advantage.
So that's the plant. What about the next layer up, the tools?
Right, the platforms. Think Azure AI Foundry. This helps customers manage AI applications at scale. And the adoption is explosive. Processed over 500 trillion tokens this year, a 7-fold increase. 80% of the Fortune 500 are using it. And what's really key here is that it's model agnostic. It runs OpenAI models, sure, but also Meta's Llama, xAI's Grok, soon Mistral AI. It's becoming a central hub.
And then there's Microsoft Fabric. That seems to be popping up everywhere.
Yeah.
Revenue up 55% year over year, over 25,000 customers. They called it the fastest growing database product in their history. What's Fabric doing that's so essential for AI? Fabric is basically the key to unlocking enterprise data for AI. You need clean, organized, accessible data to feed these models, especially for company-specific AI tasks. Fabric provides that unified data foundation. Its rapid growth just shows how desperate companies are to get their data house in order for AI. It's foundational.
Okay, so infrastructure, tools, then the top layer is the products, the applications, Copilot.
Yeah, the scale here is massive too. The Copilot ecosystem across commercial and consumer has passed 100 million monthly active users. And if you broaden it out, AI features across all Microsoft products like in Office or Windows now engage over 800 million monthly active users. That's incredible reach.
And Microsoft 365 Copilot specifically, the main enterprise one, they said it's being adopted faster than any other new suite in M365 history. Big names jumping in: Barclays, UBS, Pfizer, Wells Fargo.
It's getting serious traction. And don't forget, GitHub Copilot for developers. 20 million users now. 90% of the Fortune 100 are using it. That creates this amazing feedback loop, right? Devs use it, generate code, that data refines the models, Copilot gets better. It really cements Microsoft's role in how software gets built.
Okay, here's where it gets really interesting for me. The strength wasn't just in the cloud segment, it was pretty broad-based. Are we seeing this AI halo effect starting to lift other parts of the business too?
I think we definitely are. Look at productivity business processes, the segment with Office 365, LinkedIn, Dynamics. That brought in $33.1 billion, up 16% year over year. Strong growth. Within that, Microsoft 365 commercial grew 16%. Partly more seats, about 6% growth there, but crucially also higher average revenue per user, ARPU.
Why is ARPU going up?
Two main drivers. Customers moving up to the pricier E5 plans for security and compliance features, and the early monetization of Copilot adding value and justifying higher spend. So Copilot isn't just new revenue, it's making the whole suite stickier and more valuable.
And one standout was Microsoft 365 Consumer. Revenue there surged 21%. How did that happen?
Combination of factors. Subscriber growth was solid, up 8%, taking them over 80 million subs. But also, they had a price hike back in January, and that clearly boosted ARPU significantly. Consumers seemed willing to pay. And quickly, LinkedIn held up well, 9% growth. Dynamics 365 kept climbing fast, 23% growth. clearly taking share.
Okay, now let's look at more personal computing. That's Windows, Surface, Search, Gaming. $13.5 billion in revenue, up 9% year over year. That feels surprisingly strong for that segment, doesn't it? It usually grows much slower.
It really does.
Yeah.
Usually you expect flat to maybe low single digits there. Windows OEM revenue grew 3%. Not huge, but it suggests the PC market might finally be stabilizing after that long slump.
What else stood out there?
Search and news advertising, excluding the money they pay partners, grew a really robust 21%. That feels like a direct AI impact. Integrating AI into Bing search and the Edge browser seems to be making them more competitive, driving usage and ad revenue.
And even gaming showed strength. Xbox content and services revenue up 13%, driven by Call of Duty, Game Pass.
Yeah, and they hit a notable milestone. Game Pass generated nearly $5 billion in annual revenue for the first time. That's becoming a serious business in its own right.
So how does this consumer side connect back to the bigger AI picture?
There's a really important synergy here. All those consumer touch points, Windows, Edge, Bing, Xbox, they're like this massive, maybe underappreciated testing ground for new AI features. You get data from hundreds of millions of users interacting with AI. That data is gold for refining the models, improving the user experience, and those learnings flow right back into making the big money enterprise products like Copilot even better. Think Copilot Vision coming to Windows 11 PCs. It's a loop. Consumer data improves enterprise AI.
Got it. Okay, let's pull back and look at the strategy here. Listening to Satya Nadella and CFO Amy Hood on the earnings call, the overwhelming feeling was just supreme confidence, a sense of a major strategic pivot underway.
Absolutely. Yeah. Nadella's core message was unambiguous. We're the early days of a generational tech shift with AI, and Microsoft believes it's uniquely positioned to lead by building the definitive tech stack at massive scale. And he kept coming back to their software expertise as the key differentiator, the thing that lets them get the most out of the hardware and deliver more value. That's their moat, in his view.
And Amy Hood laid down the financial proof points for that confidence. Record commercial bookings over $100 billion in one quarter for the first time, and the commercial remaining performance obligation, the RPO, that swelled to $368 billion, up 37% year over year. That's a massive backlog of committed revenue.
Huge commitment. And that leads directly to the most dramatic part of the story, the shift in capital allocation. Microsoft plans to spend, get this, over $30 billion on CapEx in just Q1 of fiscal 26, primarily for cloud and AI infrastructure.
$30 billion in one quarter.
It's a staggering number. If you annualize it, you're talking over $120 billion a year. It's an incredibly aggressive statement of intent. They're building capacity way ahead of demand to capture this market.
How does that massive spending square with the flat headcount we talked about? That seems like a contradiction.
It highlights a really calculated strategic trade-off. They are deliberately choosing to invest massively in physical infrastructure, in CapEx, while keeping headcount tight. They're effectively sacrificing some near-term free cash flow, pouring it into building out the AI future, because they believe that secures a much larger, more defensible, and ultimately much more profitable position down the road. The discipline on headcount suggests they expect AI to drive internal productivity too.
But isn't spending $120 billion a year incredibly risky?
Well, here's the crucial insight Amy Hood provided. That massive CapEx is significantly de-risked by the huge growth in contracted revenue, that $368 billion RPO. She explicitly linked the CapEx surge to needing the capacity to fulfill those existing customer contracts. So it's not entirely speculative spending. It's investment required to deliver what's already been sold.
Ah, okay, so the CapEx is tied to the backlog.
Exactly. Which means the ratio of CapEx to RPO suddenly becomes a really critical metric for investors to watch. It signals how much they're investing relative to committed future revenue.
Yeah.
That gives visibility.
Right. So let's look ahead. What did their forward guidance for Q1 tell us, especially about Azure?
They guided for Azure to continue its strong momentum, expecting roughly 37% growth in constant currency for Q1 fiscal 26.
But there was a catch, right? The capacity-constrained comment.
Yes. CFO Amy Hood specifically said Azure is expected to remain capacity-constrained through the first half of the fiscal year.
Okay, so what does that really mean? They're guiding for 37% growth while spending $30 billion a quarter on CapEx, and they're still saying they're capacity-constrained.
It's a hugely powerful signal about demand. It strongly suggests that the underlying unconstrained demand for Azure AI services is actually higher than the 37% they're guiding to. That 37% is likely the maximum they can physically deliver right now, even with the massive spending. The real demand might be even higher.
Wow, so as all that new capacity they're building comes online later in fiscal 26.
Exactly. There's a real possibility that Azure growth could stay at these very high levels or maybe even re-accelerate as they alleviate those constraints in the second half of the year.
Interesting. We should also note the softer guidance for more personal computing, expecting declines in Windows, OEM, and gaming revenue next quarter.
Right, but that feels less like weakness and more like strategic focus.
Yeah.
They're clearly prioritizing winning the enterprise cloud and AI platform war right now. That's where the big bets are going.
And did they mention risks?
Oh yeah, they were prudent. Mentioned intense competition everywhere, execution risks tied to this massive AI push, and potential supply chain disruptions that could slow down the infrastructure build-out. Standard, but important caveats.
Okay, so let's try to wrap this up. The main takeaway seems to be that Microsoft's Q4 wasn't just a strong quarter. It feels like it was the definitive proof, the validation of a whole new growth model for the company.
I think that's right. It really confirmed that this AI flywheel concept is spinning and spinning fast. The massive infrastructure investment drives people to use their unique platforms like Fabric and AI Foundry. That enables the killer apps like Copilot. And using Copilot drives even more demand for the underlying infrastructure. It's a self-reinforcing loop.
That flywheel sounds incredibly powerful, almost unstoppable if they execute. What's the key thing they need to do to keep it spinning so fast, especially with rivals like AWS and Google trying to compete?
Continuous innovation and nailing the execution, especially on those platform and application layers. That's what locks customers in. Their advantage is that integrated, full-stack approach. It's really hard for competitors to replicate that entire chain, from silicon optimization right up to the AI assistant in your Word document. It pushes customers towards consolidating on Microsoft's platform.
They're not just selling cloud compute anymore, they're selling...
An integrated path to AI transformation. That's the pitch.
So what does this all mean for different groups? Let's break down the implications. For investors.
For investors, the game has changed a bit. Yes, look at revenue and profit, but the key things to track now are Azure consumption growth, that RPO number, and the CapEx to RPO ratio. The bet is that this huge upfront investment secures dominance in AI, leading to sustained high growth and eventually bigger margins. The risk? The sheer size of the investment and how effectively competitors respond.
And for those competitors like AWS, Google.
Microsoft has basically thrown down the gauntlet. That 39% Azure growth, the $30 billion quarterly CapEx, that sets an incredibly aggressive pace. Competitors need to figure out if they can match that spending, and more importantly, how to counter Microsoft's deep AI integration across software people already use every day. That's the tough part.
And finally, for enterprise customers, what's the message for them?
The message is clear. Strategic platform consolidation. Microsoft is arguing forcefully that if you want to really leverage generative AI, you need to commit more deeply to their entire cloud stack. Fabric for data, M365 Copilot for applications, all running on Azure. Now that obviously raises concerns about vendor lock-in, which are valid. But the implied reward is that it's the fastest, most integrated way to transform your business with AI. It's a compelling trade-off they're presenting.
Yeah, that really raises the big question about the long term. Can anyone else realistically keep up with this pace and depth of integration, or are we seeing the market consolidate even faster around just a couple of mega players? So wrapping it all up, Microsoft isn't just the software company we knew, it's morphing rapidly into this foundational infrastructure provider, building its entire future around AI dominance.
Exactly. And maybe the final thought for you, the listener, is this. Think about how this unprecedented investment and strategic shift by Microsoft won't just reshape the tech industry. How might it fundamentally change your daily life, your interactions with technology, with information, from how you search the web to how you collaborate at work to how new products get designed? What could that actually look like for you in the next 5 or 10 years? It's something worth pondering.